But the snap for more is investment mentor Julian Tarrobago joining us here. Welcome back to the program, June. Thank you so much for joining us.
My pleasure.
All right, so the credit ratings downgrade in the U.S. How are you assessing how Philippine investors have reacted?
I think that while it warrants some reaction, the market is pretty much priced in a lot of negative news, and hence the resilience of the market recently, I think is an expression of that. Yeah.
Right, but when I look at the yields, the long-dated Treasury yields in the U.S., that rose above 5%.
Right.
So that kind of gives an impression that risk is really out of the door, and that Philippine investors should heed and listen.
Well, absolutely. That's one consideration. The other considerations we have for looking at, guiding investors, from us guiding investors, is looking at the bigger picture, which is that's a consideration. But the truth of the matter is, GDP growth is stabilizing in the Philippines. Inflation's going down to multi-year lows. Pressure on interest rates is less than ever, and valuations are very attractive at these levels. So that said, there still are risks. The full impact of tariffs, whatever form that may take, is still up in the air. We've seen some reprieve recently, but that's still a consideration, we think. But right now, based on our framework, we have a neutral rating on the Philippine market.
Is that good or bad?
That's good. It means still be selective, be cautious, but don't bet the house everything on it.
Yeah, because when I look at the first quarter earnings, I mean, it came in line with estimates, with some a little bit challenged, like maybe telcos and maybe even power.
Right.
How are you assessing first quarter, and how should investors plan ahead for the next couple of quarters?
Sure, great question. I actually think the first quarter earnings were actually quite soft, underwhelming. From my vantage point, the first quarter earnings in general grew by about 5%. That's like half what we were expecting, more or less, for full year 2025. And while that is a bit of that demands some level of scrutiny, I think the fact that inflation is falling and we have certain sectors, certain companies that are outperforming. What stood out in the first quarter were the likes of GT Capital. I know you talked about the plunge in auto sales.
Yes, we did.
Earlier, but
yeah, just a few minutes ago.
I think it was mentioned also that was partly because of a seasonal thing, and there was a holiday that pretty much shortened the month for April. You have ICTSI also, and property companies even are still growing by about 10-11%. So there's reason to be optimistic on the market, but also again, we have a neutral, so take into consideration all the risks that are still there. You mentioned JG Summit also.
Yeah.
These are the companies that while on the surface seem still, in a bit of uncertainty, but note the operational improvements in some of these companies that I think those shown through the results.
What are you noting, though, with that investment course? I'm now very curious how your participants or the students are acting and reacting, and what are we learning from that so far, from the red to green investment course?
Oh, thanks for asking. Well, what I've learned so far, it's been a month since I launched the investment course, is that people are still trading on emotion. They're trading on hype, what they see in social media, and investors still tend to hold on to losers for too long. So there's a glaring lack of structure. So when we come in, I try to let them trade guesswork for process, guesswork for structure, and what I mean by that is asset allocation, get that right, investment research, risk management, and portfolio sizing. So that's how we add structure. That's how I help learners.
Right, take away the emotion and try to trade on logic. Well, we'll catch up in the next. For sure, you'll be back in the next couple of months to tell us more about that.
Thank you.
Thank you, June. Appreciate your time and expertise. June Tarrobago Jr., investment mentor.